Hello, you. Welcome to The Deep Dive, the show that, well, digs into the details so you don't have to.
Great to be here.
So today, we're plunging into something that sounds pretty technical at first, government debt management in Japan.
Yeah, it can sound a bit dry, but honestly, it's fundamental. Think about your own life, right? Sometimes you need to borrow money.
Sure. You know, maybe for a car, a house deposit,
Yeah.
or just bridging a gap till payday.
Exactly. Well, governments do that too, just on this mind-boggling scale. And how they manage that borrowing is incredibly important. It affects, well, pretty much everything.
Right. And we've been looking at the official Debt Management Report 2024 from Japan's Ministry of Finance to figure this out.
It's a dense report, but it lays out the whole strategy, the nuts and bolts of how Japan handles its debt.
So our mission today is to unpack this.
Yeah.
What is government debt management in Japan? And crucially, why does it actually matter to you?
Okay, so let's start super simple. Why does a government even need to borrow money?
Right, the basics. It's kind of like a household budget, isn't it? You have income, like a salary.
Yep, mostly taxes for the government.
And then you have expenses, rent, food, bills. For the government, it's roads, schools, healthcare, all that stuff.
Exactly. Public services, big projects. And sometimes, just like for a household, the expenses are more than the income coming in.
Ah, the classic budget shortfall. So if your spending outstrips your paycheck, you might need a loan or maybe lean on a credit card for a bit.
Governments face the same thing. When spending is higher than tax revenue, that's a budget deficit. To cover it, they have to borrow. They also borrow for huge investments, things too big for 1 year's budget, or even to pay back old debt.
And the scale. You mentioned scale. The report gives a number, right?
It does. As of the end of fiscal 2023, so March 2024, the total outstanding government debt, not counting some specific guarantees, was around, get ready for it, 1,297 trillion yen.
1,297 trillion. Okay. I can't even really picture that number.
It's astronomical. It's more than twice Japan's entire yearly economic output, its GDP. It's just vast.
Wow. Okay. So how on earth do they borrow sums like that? What's the actual mechanism?
Well, the main tool, as the report details, is issuing JGBs, Japanese government bonds.
JGBs. Okay, I've heard of those. They're like IOUs.
Pretty much, yeah. Official IOUs.
Yeah.
Buy a JGB, you're lending the government money. They promise to pay you back later, usually with interest. They also use something called financing bills for really short-term cash needs and sometimes direct borrowings.
Okay.
And the report also mentions government-guaranteed debt that was about 29.5 trillion yen. That's for specific agencies doing public projects where the government basically co-signs the loan.
Got it. So mostly JGBs.
Yeah.
But I noticed the report talks about different types of JGBs. Does that mean they borrow for specific reasons?
Okay.
It's not just one giant pile of debt.
Exactly. That's a really important point.
Yeah.
It's not just one big pot. They issue specific types. For instance, there are construction bonds.
Okay, construction bonds.
Yeah.
That sounds self-explanatory.
It is. They're specifically for funding public works, new highways, bridges, government buildings. Think of it like taking out a mortgage specifically to build a big extension on your house.
Right, a long-term investment financed over time. Makes sense. What else?
Then you've got special deficit financing bonds. These are the ones used purely to cover that gap when taxes just aren't enough for regular spending.
So that's the credit card analogy. Covering the bills because the paycheck didn't quite stretch.
That's a good way to think about it, yeah.
Yeah.
And then there's a huge chunk issued just to pay back old bonds that are coming due. They call these refunding bonds.
So paying off old debt by taking on new debt, like refinancing a loan.
Exactly like refinancing. You're just rolling it over. It's constant management.
Okay.
And what's really interesting, and the report highlights this, is they're using bonds for very specific modern goals, too. Like they mention plans for children's special bonds from 2024 to 2028.
Children's special bonds. So debt linked directly to child support policies.
Precisely. And also Japan climate transition bonds, specifically for funding environmental projects.
Huh. Okay, wait. So the government actually labels some of its borrowing. Like, this debt is for climate action, this debt is for families.
It seems so. It shows a deliberate choice to tie specific funding needs to specific borrowing instruments. Makes it feel less abstract, maybe more tangible.
Yeah.
Tied to real stuff.
It definitely does. Okay, so they decide why they need money, what kind of bond to issue, How do they actually sell these things? Who's buying trillions of yen worth of IOUs?
The main way is through auctions. The Ministry of Finance basically says, okay, we want to sell this many bonds maturing on this date, and then big financial players, banks, insurance companies, investment firms put in bids.
Bids, like an auction house.
Sort of, but more formal and electronic. They bid on the yield, which relates to the interest rate. The government takes the lowest cost bids until they've borrowed the amount they need. It's a competitive market.
Okay, auctions to big institutions.
Yep.
So who actually holds all this debt in the end? Does the report show that breakdown?
It does, and this is where it gets really fascinating. Looking at the data from December 2023, there's one holder that absolutely dwarfs all the others.
Okay, I'm intrigued. Who is it?
The Bank of Japan, the central bank.
Japan Central Bank. Okay.
Yeah.
How much? Like what percentage are we talking?
The Bank of Japan, the BOJ, holds 53.8% of outstanding JGBs.
53.8. Wait, over half. The central bank owns more than half the government's debt.
Yeah, more than half.
Wow. Okay, that seems like a lot. Is that normal? What does that even mean?
It's highly unusual compared to other major economies. It's largely a result of the BOJ's massive quantitative easing policies over the last decade or so. Buying huge amounts of JGBs was their main tool to pump money into the economy and fight deflation. So monetary policy has massively shaped who owns the debt.
Okay, that's a huge piece of the puzzle.
Yeah.
Genuinely surprising. So after the BOJ's 53.8%, who else is holding JGBs?
Well, the next biggest are insurance companies. They hold about 18.5%.
Yeah.
Then you have banks at 10.9%.
Okay, insurance and banks, that makes sense.
Then foreign investors hold around 6.7%. Public pensions, like the big government pension fund, hold 5.0%. Other pension funds have 2.9%. And then households, like individual people in Japan, just 1.2%.
Only 1.2% held by regular people. Even though the debt funds public services for them, that's tiny.
It is a very small slice. The report does mention the government wants to encourage more buying from foreign investors and individuals, to diversify who holds the debt. Spread it out a bit more.
You diversify, right. Reduce reliance on just a few big players, especially the central bank, I guess.
Exactly. And related to managing the market, the report talks about the JGB Market Special Participants Scheme.
Okay, what's that? Sounds official.
It is. It started back in 2004. It's basically Japan's version of a primary dealer system, like in the US or UK. Certain big financial institutions are designated as special participants.
And what do they participate in?
They have obligations, like they have to actively bid in the JGB auctions and also help make sure the bonds can be easily bought and sold after they're issued what's called the secondary market. It helps keep everything flowing smoothly.
Ah, okay. So the government sells the bonds, mostly to big players and the central bank, and then has this system with special dealers to keep the market for those bonds active and liquid.
Precisely. Liquidity is key. Making it easy to trade bonds helps keep borrowing costs down and the market stable. The report mentions operational things they do too, like speeding up settlement.
Settlement, like when the money and the bond actually change hands after a trade.
Exactly. They shortened it to T+1 back in 2018. Means the trade settles the next business day.
T+1.
Mm-hmm.
Okay, so faster is better.
Yeah, think of it like when you buy something complex online, making the time shorter between clicking confirm and everything being finalized reduces the risk, Makes the whole process quicker, safer, more reliable. It builds confidence.
Good analogy. Okay, so they manage the market mechanics. Does the report mention any other specific types of bonds or tools they use?
It does. It talks about inflation-indexed bonds, JGB.
Inflation indexed.
Yeah.
So their value changes with inflation.
Yes, exactly. The principal value, and therefore the interest payments, get adjusted based on the consumer price index, the CPI.
So if prices at the supermarket go up, the value of these bonds goes up too. That connects directly to everyday experience.
It really does. It links the bond's return to your actual purchasing power. Japan started issuing these again in 2013 with a guarantee you get your initial investment back, which was partly about addressing worries over future inflation after years of deflation.
Interesting. Any other market tools?
Yeah, they mentioned things like liquidity enhancement auctions, basically trading older, less common bonds to keep them available, and also buybacks.
Buybacks. The government buys back its own debt before it's due.
Why? Sometimes to manage the total amount outstanding or to help support trading in certain bonds. The report gives an example. They plan to buy back 60 billion yen of those inflation index bonds in the second quarter of 2024, just to help keep that specific market stable.
Okay, wow. That's a lot to take in. We've gone from why they borrow to the insane scale, the different types of borrowing linked to real things like roads or childcare, then who holds it? Hello? Bank of Japan, and all these tools for managing the market, options, dealers, buybacks.
It's a complex machine.
It really is. So let's do the big zoom out. Why should you, listening right now, care about all this? JGBs, T+1, trillion yen figures. How does it connect back to daily life?
Because this whole system, as collapsed as it is, directly impacts the economy you live in and the services you use.
Okay, first off, the stuff the debt pays for, right? Those construction bonds build roads you drive on, maybe your local library. The deficit bonds keep essential services running. And those children's special bonds, that's debt directly funding support for families.
Absolutely. Second, and this is huge, government debt management influences interest rates. Everywhere.
How so?
Through how much the government borrows, how it affects the bond market supply and demand. And especially because the Bank of Japan is such a massive player, its actions in the JGB market are a core part of its monetary policy, which directly aims to influence interest rates.
Yeah, and interest rates hit everyone. Your savings account interest, your mortgage rate, car loans, student loans, even business borrowing costs, which affects jobs. It's all connected.
It really is. And third, that specific point about the BOJ holding over half the debt, that's not just a statistic. It's a result of trying to boost the economy, but it has potential knock-on effects for things like inflation down the road or the government's financial health. It's this intricate dance between government spending and central bank policy.
So understanding this stuff, even just the basics from this report, gives you a lens on the country's financial plumbing, how the government funds itself, how it interacts with the financial world, and how those big decisions can ripple down to your wallet.
Exactly. So to kind of wrap up this deep dive, Japan's government debt management is this enormous, vital operation, borrowing trillions for specific things, selling bonds through auctions, dealing with this unique situation where the central bank is the main owner, and actively managing the market.
And all of that ultimately affects the services you get, maybe the interest rate on your next loan, and the overall economic climate.
Right. And here's maybe the big thought to leave you with, stemming directly from this report. Given this truly massive scale of debt, over double the GDP, and the really unusual situation with the Bank of Japan holding more than half, what are the long-term consequences?
Yeah.
How might this unique debt structure shape Japan's economy years from now? What could it mean for future inflation, or maybe future taxes needed to handle the debt? Or even how much room the government has to act in the next economic challenge?
That's a huge question. No easy answers, for sure. But understanding the mechanics we talked about today from the report gives you a much better framework for thinking about it when you see those headlines.
Definitely. Well, thank you for joining us for this deep dive into Japan's government debt management.
Yeah, we hope unpacking this report helped make sense of why these big abstract numbers really do matter.
Goodbye.
Goodbye.